Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com looks at the major markets with the Dow and S&P 500 almost hitting record highs. He takes a gander at gold, silver, and crude. Vancouver realtor Steve Saretsky talks about how the federal election could affect the housing market. Recreational property owners may get hit with a new tax. Rick's Picks editor Rick Ackerman is bullish on Apple, Amazon, and the U.S. dollar, and he tells us why. Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Aven Resources CEO Jim Pettit. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you, Jim.
The markets are tickling record highs once again. What does that tell us?
Once again, and it's depending upon the index you're looking at. The S&P 500 just literally kissing against the highs. We've been up here twice already this year, and there's, for all that we're in the beginning of a favorable period for seasonality, there is just no volume to speak of. We're in the midst of earnings period, lots of hits and some pretty big misses. Texas Instruments got hit badly this week, but on the other side of the coin, you've got Tesla, which had just huge short positions against it. Closed off the week with a couple of really impressive days, up 30% from early in the week. So and the banks in the U.S. doing quite nicely. So if we take a look, though, down to, say, the Russell 2000, the small cap index, it's up around the highs of the last few months, but those are well short of what we saw earlier this year and last year. So it's a pretty mixed bag out there. There are definitely going to be some individual opportunities on stocks, and we're going to be watching pretty closely some of these indices to see how much traction they manage to get at this point.
How are gold and silver doing?
Good pop at the end of the week. So gold got up into that 15-20 range. Silver had a 50-cent pop overnight on Thursday night, Friday morning, up to some pretty good resistance levels at this point. And, it's interesting. Most traders who have been around the precious metals over the years are well aware of the strong seasonality from mid-December that carries you through February. And in good years, it will push from February beyond, usually out into April. So, think back to the all-time high in silver at $50. That was right at the end of April. But the stretch from here through December is polarized when you take a look back historically and say over the last 40 years or so, you've got maybe 23% of the years when it was in a downtrend that it was capable of having any strength to speak of in this time window. In flat years, it was about 60% of the time it was able to do something. And in the up years, of which really there aren't all that many, I think you've only got about 9 years out of 40 that I would consider to be in a bull market phase, and this would be one right now. The bulk of those did manage to put on some strength. But there are some catalysts that we need to be watching for, and we're putting together a report which we'll make available next week that looks specifically at what criteria would be necessary to really become the catalyst for the next up move here as far as gold is concerned, and trying to get out of this trading range that it's been stuck in since the middle of the summer. So, as I say, we'll have that later in the week, and make that available as part of a trial subscription package that we're going to have, where people can sign up for $60 and have our reports right through the end of the year. So that'll be on precious metals, stocks, the oil market, anything, and Bob Hoy's research.
And what is going on in oil right now?
Well, oil's had this bounce from that $52 support area, which was really, it was a perfect area to find support. Normal seasonalities, you would look for a low later in the year. The 10-year cycle that I monitor and has really been on track really, really well. That's currently in its upward mode, and we'd be looking for resistance in the $60 to $62 range. Got some very specific criteria to be looking for on that. And the overall plan is still that the bias will be up through the second half of next year and maybe a little bit later. It's just a matter of, how it gets up there. And that's what we try to do for people, is provide them with some technical guidance for entry and exit points along the way. And so far, they've been working out pretty well.
On the crude front, so those are included in your special report deal?
Yes, that one went out to subscribers earlier in the week. We'll make that available. So if they want to go to the website at chartsandmarkets.com, there's a link there on the front page.
Husky Oil announced layoffs this week. Any fallout from that?
It's, you had to be anticipating that there would be reaction following the election. The layoffs have done very little in terms of driving any stock prices down. Husky actually closed, at 9:30 on the week, pretty much where it had been at the early part of the week. Had one little shakeout on Thursday, but still managing to hold the low. The whole complex, as far as the oils are concerned here in Canada, is looking like there's maybe one more wave of selling to come in as far as tax loss selling is concerned, being, that we're just coming to the end of October. That November to mid-December window is where you should be looking for some pretty darn good opportunities on the Canadian oil stocks. And we would typically, in our work, look for some capitulation readings where, people are really throwing in the towel, and then look for volumes to start drying up on the selling as they try and base out. So I think the oil patch in Canada, having been beaten down as much as it has, probably has some pretty good percentage gains available to it as we move through the end of the year.
Ross, where can people get information again on the special deal?
It's at chartsandmarkets.com.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Steve Saretsky next on This Week in Money.
Always consult your investment professional before making any investment decision.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Steve Saretsky. He's a Vancouver-based realtor that you can find online at stevesaretsky.com. Welcome back to the show, Steve.
Thanks for having me on.
Steve, just before we get going with the interview, could you please tell us about your monthly newsletter?
So it's just newsletter. I have a weekly newsletter that kind of goes out, just sort of summarizing my thoughts on the Canadian housing macro landscape, a little bit on the economy and whatnot, and then there's also a monthly report that details the Vancouver housing market. It goes into depth on everything that I'm seeing from a feet on the ground perspective, so it's pretty detailed.
And that's on your website, stevesaretsky.com?
Yeah, if you go there, there's a couple links to sign up. It should be pretty easy for people to find.
Mm-hmm. Now, Steve, the federal election ended with a Liberal minority government taking into account election promises can't really be relied on. What were the real estate promises made by the Liberals, and how could they affect the real estate markets in Canada if they do follow through?
Yeah, I think that's the big question, is if they actually follow through. What we have right now is the Liberals have proposed a national sort of speculation tax. It's similar to the BC government's one that they implemented last year, which is basically if you're a non-resident, non-Canadian, and you don't utilize your home for, say, 6 months a year, so you got to either live in it as a primary residence for 6 months, or you have to rent it out for at least 6 months a year. They want to do a 1% national empty homes tax. So whether you're in Vancouver, Toronto, or New Brunswick, there's going to be a 1% tax on empty homes. And then they're also proposing an increase to the first-time home buyers incentive program, which would increase the amount of money that CMHC would gift first-time buyers in Vancouver, Victoria, and Toronto, up to $780,000 purchase. So I think right now it's capped at about $480,000, and then they want to push that to about $780,000 in those frothy cities where housing is really expensive. So obviously that remains to be seen if that's going to get introduced. But if it does, I think it probably stimulates the low end of the housing market, which I would argue already is doing relatively quite well.
In this minority government, the Liberals need the support of the NDP or the Bloc. Did the NDP and the Bloc make any promises concerning real estate, and what effect could that have?
I mean, I can't speak too much on the Blocs. As far as I didn't really see anything in there that they were talking about. The NDP is, they were kind of discussing a lot of things that, the Conservative had. They wanted to do a 30-year amortization for first-time home buyers, or people that are basically using insured mortgages. They wanted to extend those amortizations to 30 years. They also have talked about doing a public inquiry into money laundering. So again, I don't really know what that means or what that entails or how it actually moved the needle. But in terms of the Liberal, and actually the NDP also proposed a nationwide foreign buyers tax. So I guess a little bit similar, but not quite as to the Liberals. The Liberals are proposing a nationwide empty homes tax, basically, and then the NDP was proposing a nationwide foreign buyers tax. So again, a lot of promises. Not really sure, where this is going to take us, but it's going to be interesting.
Is this empty homes tax a tax on your recreational property? Yeah,
it would be. They haven't really made any outlines as to maybe it would exempt certain touristy areas, but if you have a secondary residence that you're using as a vacation home and you're a non-resident and you're not utilizing it for 6 months of the year, then you would get taxed, as far as I understand it.
Is that going to be a blow to cottage country across the nation?
I think it would be, yeah. I know that here in BC, we've had a lot of Albertans that have been frustrated that own vacation homes in Kelowna and whatnot, and they've been subject to this empty homes tax here in BC. So I know that it's BC, it's impacting Canadians. This one that the Liberal government wants to roll out, it would just be, my understanding, just on non-resident only. But it's certainly people that are investing here. Could be Americans south of the border that maybe have summer homes up here or what have you. I think that they could potentially be impacted for sure.
What's the latest on Vancouver area real estate in the various price ranges?
It's very much a mixed market. I think if you talk to everybody, every realtor on the ground, I think that every single one of them is pretty confused as to what's happening in the market. So right now you have the high end of the housing market, anything above $2 million is still coming down in price. So it's still very weak. There's a lot. I think I was looking at it the other day. If you look at homes priced at $3 million and higher, there's about 15 or 16 months of inventory for sale. And now if you look at just condos in Greater Vancouver, I think right now there's only 4 months of inventory for sale. So basically what you have is the investor and speculator and foreigner are no longer purchasing, or if they are, it's very, very minimal. And you have this local market that is doing all the buying. So everybody that's buying right now is, for the most part, end users. And you say, okay, well, what can they afford? You're living here in Vancouver. You're working here in Vancouver. You got a stress test that, caps your borrowing capacity to 5 times your income. So most people are sort of stuck in these affordable price ranges, or everyone's competing for, 1-bedroom condos under $650,000 and single-family houses with basement suites under 1.3. And so those sort of segments of the market are still doing relatively quite well. And as you can see, it's hard to see a scenario where prices are dropping when you only have 4 months of inventory for sale. So yeah, I think the market is very much segmented into certain different sections.
Is the activity in the low end of the market causing developers to consider building more condo towers?
Well, we've seen a lot of developers pull back, and I think that that's still sort of the sentiment is that proceed with caution, basically because, it's a huge endeavor to take on, and if you're going to acquire a piece of land today, you have to get it at the right price, and so you're kind of trying to forecast a couple of years out to figure out what you're going to be able to pre-sell these things for. And the pre-sale market is heavily dependent on the investor and speculator. That's predominantly who buys pre-sale condos, is people that are investors and speculators and not end users. And as of today, that market is still hasn't returned yet. The investor and speculator is still sitting on the sidelines. So I think as a pre-sale condo developer, everything that I'm seeing, at least in the data, is that there's not a whole lot of activity going on. That segment of the market has picked up a little bit, but I don't think enough to necessarily encourage a whole bunch of developers to jump, head on into the market and start acquiring a whole bunch of land.
Is this going to cause an eventual shortage of condos again?
I think it will eventually over time. I think it's all cyclical. But I think that right now we have 45,000 units under construction, an all-time record high, and you have housing starts still at all-time record highs. So I think that your pipeline of new supply is full for the next probably 3 to 4 years, and then after that, it's anyone's guess. I think that we'll start to see obviously housing starts slow down, and the number of homes under construction slow down significantly, which will, I think, probably weigh on economic activity, and will probably eventually, over time, create a shortage of homes again. But I think as it stands today, I think we have a lot in the pipeline.
CMHC said it predicts that within 2 years, the housing market will be, quote, normal again. Will it in 2 years? And what is normal?
Yeah, I don't know. I've kind of stopped listening to CMHC predictions. I just think, I was reading their annual report yesterday, and they're saying that next year prices are expected to start going up again. So, I don't know what normal is. Is normal back to the 2016 price levels? I don't know. I think that's quite an interesting call based on we're sort of near the end of this business cycle. Clearly, construction activity, which is a huge part of the BC economy, is slowing down. Interest rates don't really have much lower to drop at this time, so it's I'm not really sure where that extra stimulation is going to come from to start ratcheting prices higher. So yeah, I'm not really too sure where CMHC is sort of where they're getting their information from. I know that obviously they insure bulk of mortgages here in Canada, so I think it's probably in their best interest to see prices rise, but it's hard to say.
Well, the CMHC, those are the brilliant folks who, after spending $250 million on a study, couldn't find out where 40% of the mortgage money was coming from. So, if you can't...
Yeah, I don't know. I don't really want to get started with sort of, big bank economists' predictions on the housing markets. They don't really ever forecast a decline in home prices. So, I tend to sort of, what I tend to read from those reports is much different from feet on the ground perspective.
We'll have more with Steve Saretsky right after the break.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABN.V. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Steve Saretsky. Steve, are new foreign buyers continuing to purchase homes in the Vancouver market?
I haven't really seen much activity at all. That's just not myself. It's colleagues. I certainly try to keep my pulse on the market, and I'm just really not seeing it. I think if you actually look at the data too from BC land transfer tax data, as you can see that foreign purchases in the province of BC, let alone Vancouver, it's been a pretty steady trend line down. I think last couple months ago, last set of data back in August, I think there was about $140 million purchased of BC real estate, down from the cycle high of $400 million back in early 2017. So, foreign purchasing activity has dropped off significantly, and what we're stuck with right now is basically this local market, and that's why the high end continues to fall, and the low end is holding up quite well.
So no big flight from Hong Kong because of the political trouble there?
Yeah, no, not seeing really anything from Hong Kong either. Talking to a lot of guys over in West Vancouver, which I think is probably a market where you'll see some of that money flow into. Obviously, the safe haven luxury real estate, but they're not noticing anything either, and that market is still coming down in price. So I think the Hong Kong stuff is largely a media headline that obviously everybody likes to get excited about. Is what's the next catalyst for Vancouver real estate prices to start rising 20% annually once again? And I think that they've certainly, it's a nice, compelling story. But as of right now, there's really no evidence of that happening at this point.
Are the banks becoming looser with mortgage credit for all price ranges?
Well, I think that the credit I think they've certainly adapted to the mortgage stress test. I think that if you look at residential mortgage credit growth on a 3-month annualized basis, it's actually growing faster than it did prior to the introduction of the B20 mortgage stress test. So, mortgage credit growth, the banks and the consumers have adapted to the new regulations. It is growing, and I think that the banks are choosing where to put that mortgage credit. Banks act as investors, and they get to dictate and decide where they want to lend money to. And I think that what's pretty evident to see, I think people all have to do is sort of ask the question, why is, Eastern Canada ripping right now? Home price growth is growing very, very rapidly, and Western Canada is not at all, and prices are actually declining. So it really just comes down to the banks allocating capital where they see fit, and I think that they've certainly, my conversations is they're allocating more money into Eastern Canada.
As the Vancouver real estate market started to cool, the Toronto and then the Montreal markets picked up. What caused that?
Yeah, so, the popular media narrative is, well, the foreign buyer just sort of saw that, there's no foreign buyers tax, so then they went to Toronto and then they went to Montreal. Well, what we're seeing is the foreign buyers tax in Toronto is still there and prices are still going up. And what we can see is the Chinese globally have become net asset sellers. So they're not just selectively choosing to invest their money into Ottawa or Montreal real estate. These guys can put money wherever they want in the world. And as we're seeing, again, they're net asset sellers this year in 2019. So you can't really tell me that they're just selectively choosing to enter Ottawa and Montreal real estate. What happens is the banks, at the end of the day, foreign buyers make up maybe 5% of the market. The other, 10 or 15% you want to argue are ultimately Canadian citizens, or they have permanent residency status here. So what happens is you basically have a whole bunch of locals, where we're right now, today, we're enjoying record low unemployment rates, and we're enjoying basically close to record low mortgage rates. And so as long as you have that background and you have this belief that home prices will rise, people are confident to borrow, and the banks have been allocating money into different markets. So back in 2016, lenders were lending aggressively in Vancouver because there was a presumption that prices would continue to rise exponentially. And as they started to fall, banks started to pull back and they started to allocate that capital elsewhere. And that elsewhere was in Toronto, Montreal, Ottawa, etc. And so we're seeing all the growth right now in Eastern Canada and none of the growth in Western Canada. I think a lot of that has to do ultimately with the banks allocating capital as they see fit. They have certain requirements and certain targets that they need to hit, and they're obviously not going to lend aggressively in Vancouver as home prices are falling.
Following the election result, there's been a lot of focus on Wexit, the possible forming of a new country in the Canadian West. Is this something the real estate analysts are going to have to keep an eye on?
I don't know. It's probably not my area to sort of touch on. I think that Alberta is I think everybody knows, is pretty depressed. I think that, it's interesting. Again, we're talking about the Economist reports that we read, and, a lot of them are saying, well, Alberta's on the mend and the housing market's on the recovery. And when you actually talk to, real estate brokers there, it's a much different story. The market is still very depressed there. Housing is still very, very soft. And there actually is, when you speak to them, there's very little signs of recovery. So I think that Alberta is a bit of a constrained purchase at this time. I think that people are pretty beat down on it, but I'm actually, I think that a lot of that is already priced in, and I think that it's kind of an interesting play. I mean, I think certainly a lot of the rest of Canada is I would argue, overvalued at this time. So I think you could argue if you're going to make a play in Canadian real estate, maybe it's Alberta. I don't know. I'm certainly not the expert in that market, but I think that, it's a bit of a contrarian constraints play that, if you have a longer term outlook, it might pay off.
Steve, how can people get in touch with you?
Probably just by email, steve@stevesaretsky.com, or just check out my website, stevesaretsky.com, and, happy to answer any questions.
Steve, thanks a lot for being on the show.
Thanks a lot, Jim. I appreciate it.
My guest has been realtor Steve Saretsky. He was speaking to us from Vancouver. Coming up, Rick Ackerman, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from Boynton Beach, Florida. Welcome back to the show, Rick.
Thanks very much for inviting me on, Jim. Always a pleasure.
Rick, what is the latest at Rick's Picks?
Well, we're watching some stocks very closely. I watch Apple and Amazon because I'm so bearish that I need something to keep me objectively focused. And for quite a while, more than 6 weeks, I've been looking at 243 on Amazon as a minimum target. The logic being, Apple 243, and the logic there was that if the most owned stock on planet Earth, the most valuable company on Earth is moving higher, then there wasn't going to be any quick end to the bull market that has been going on for, well, we're well into the 10th year now. And I see Apple has blown past that 243, so it's moving even higher, and it makes me you have to put aside all the negatives. Housing has topped, autos have topped, consumer spending is starting to flag, capital investment is falling, China and Europe are slipping into recession. There's so many things there, but the market has a mind or a mindlessness of its own, so we really have to come up with other ways other than straight logic to predict where it might be going.
Do we have special interest in gold right now?
I like the way gold has acted. You know, the chimpanzees who basically take other people's money and they throw it at about a dozen stocks. That's how they make their living. They put it all in, well, Boeing and Johnson & Johnson. But they all kind of hang together, and typically they can't breathe and chew gum at the same time, meaning that if, you know, stocks up, gold down. So they like to either ignore or punish gold if they're moving stocks up. But we've had gold has really been pretty resilient lately in this climate. So you better believe that when the market finally gets hit, when this wafting uptrend that we've had just day after day after day after day after day, when it finally reverses, it's gonna do brilliantly.
Mm-hmm. Now, silver is also in a trading range. Does it tend to take off before gold, or does it trail?
Well, it's let's just say it's a cheaper commodity, so I think it appeals to the proletarian mind. Silver can give you that extra boost when bullion is moving. So yeah, I do like silver, and both silver and gold had a pretty nice spike today. They both came off the highs, though, as the broad averages continue to move higher. But I like silver, and it's just a good thing to buy. I mean, you had a spectacular move. I mean, an absolutely stunning move from late May when silver was trading around 14 and a half bucks, and by September, we were up around 19 and change, almost at 20. So silver looks great, but it's the kind of move, it's so vertical that you're going to need some consolidation, more than we've had, actually. The peak was in early September, and I don't think it's done digesting yet, but it's going to be pretty wild. But once it makes its move, I think we could see silver head into the mid to high 20s.
What are your thoughts on mining stocks?
I like them. I've got a lot of subscribers who follow GDX. It's a vehicle that tracks the gold mining companies. There's another ETF that you can trade. It goes by the symbol GDXJ, which tracks the exploration companies. So I like them both. You get a little more volatility there, I think, in GDXJ, but GDX, I've been looking. It's been tough to nail lately. We've had a kind of zigzaggy bottom. It topped in early September around 31, and since then we've had a recent low just above 26. So we've had a move of about 15, a little more than 15%. And I keep wanting to get in cheap, but gold it's interesting that way. It's not hanging back for too much. I mean, we'll have these sell-offs, and you just don't have a few days to play around and think, well, let's see if it weakens. It doesn't. It just sort of turns around and hits higher. So GDX has been kind of a tricky buy, but I think you wind up, when you get moderate weakness, you shouldn't try to pick a bottom there. You should just kind of jump in and consider it a long-term hold.
The U.S. dollar also continues to be in a trading range. What do you see for the U.S. buck?
Same thing we've been talking about for the last 5 years or so. I'm just a dollar bull, and we've talked about the reasons why anybody who's not a dollar bull is wrong, and the perspective comes mostly out of my conviction that the end game for the global economy will be deflationary. And deflation means forget about money supply or anything that relates to the number of dollars out there, because none of those who insist that we use that definition even know what money is anymore. There's so many forms of money, there's so many things that are fungible as money, that we ought not take our inflation deflation definitions from the supply of dollars. So what I use is just the main symptom of deflation is an increase in the real burden of debt, and that's what we're going to have. We're not going to get out of indebtedness through some hyperinflation, and we're not going to reach a point where people peel off a few $100,000 bills to pay their mortgage lender. It's just not going to happen. So there's no way. Really no way we're getting to hyperinflation, as some people seem to think. So what that implies is that the dollar will be strong. It's going to be hard to come by hard cash, hard dollars, and that's why I'm just bullish on the dollar more or less to the end of time.
We'll have more with Rick Ackerman when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Rick Ackerman. Rick, the S&P 500 and the Dow again are trading near all-time highs. What do you see ahead for those indexes?
I see more craziness. I've never seen anything as insane. I did rattle off a whole list of reasons why the Dow, currently at 27,000, just a few points below that, would be probably more logical. It'd be more logical for it to be trading around 6,000, I think. But as I said, I just follow my technical indicators. I don't let my logic get in the way. So the Dow looks higher. And one other thing, when I look at the weekly chart of the Dow, as long as it pops to new highs just to head fake everybody, I think we're going to get that. I think we will pop to new record highs in the Dow, and it is from those record highs that we're going to have a spectacular plunge. But the strange thing is, when I look at the bigger picture, the bigger chart here, going back not terribly far, just into early 2017, I could see the Dow coming down to 23,000, which would be, about $4,000 or $5,000 collapse, and the chart would still look bullish to me. So it doesn't look like the end of the world, but I just think the Dow needs a 3, 4, or 5,000 point hosing here.
Are interest rates likely to go higher or lower?
Well, lower. We're in a recession now, or we're just about to be in one, and we don't have rising interest rates in a recession. So we're looking at Europe, seeing that they're not getting any stimulus at all from rates below zero, and I guess you read occasionally that with Europe's example, everyone is so sure that U.S. rates are going below zero that can't happen. But so now we can almost be kind of contrarian here and say, yeah, I think interest rates will head lower. I don't see anything that could. I don't see any market forces there that will force rates higher. and there's a certain imperative that's pushing on the central banks, and that is they got to keep them low, because every turn of the screw, every 25 basis point increase subjects quite a few dollars, a quadrillion of them really, when you look at the derivatives market in sum. So there's so much borrowing that takes place in dollar-denominated assets that we really can't afford to have interest rates going higher. And of course, if everybody gets on that side of the bet, then they have to head higher, right? Everybody's got to be wrong. But in this case, I think the wrongness comes, again, it grows organically out of that deflation argument. Everybody's wrong simply because, they don't understand deflation, and they'll borrow money. You'll get to thinking, hey, a 3.3% mortgage, how can this possibly miss? Well, I'll tell you how it can miss. We can have 2007-8 all over again, except worse. Instead of homes losing 33% of their value on average, as they did, they'll lose maybe 60 to 70%. So you find that all of the low rates where we're doing all the borrowing now, the illusion is that they're low. But when the value of the underlying collateral starts collapsing, 2% interest rates are going to exert a crushing burden on borrowers. And that's where I see things going.
Is the Fed inflating the money supply?
I don't know. I mean, do you find it hard to borrow? I don't. I mean, I can still borrow money for 1.5% or whatever. You get these teaser offers that come with credit cards. There's no limit to the amount of borrowing you can do. That's not entirely true right now in the repo market, where certain borrowing, and believe me, it's not for capital investment or anything like that. It's really just because there's a lot of arbitraging of these financial vehicles it's volatile. The short-term swings can be pretty volatile. So you have overnight borrowing needs that impact on the repo market. But generally speaking, there's as much money out there as you could possibly want to borrow, and that's why companies that are, big companies that have $20-30 billion just sitting around doing nothing, like Apple, why they would go out and borrow money just to buy their own shares. It's like, why touch the real stuff if you can borrow someone else's money to do this or that?
Are people paying down their debts or still just adding more debt?
Well, I think with consumer spending is coming down a little bit, and I think consumers are a little smarter than government, economists, pundits, and all those people. I think they are kind of trimming their sails here. It shows in redemptions from some of these the funds. So consumers are cashing out of stocks. There's still a lot of institutional demand from the chimpanzee sector of the investment cohort. But I think that people right now are wary of taking on debt, but they do it anyway. I mean, the banking system is so clever at kicking us, whipping us, beating us, making us borrow money, making us write bad checks, as the saying goes. But they're really good at it, and you can get in deeper without really intending it. And the best example of that would be the extension of car loans out to 7 years. So it's become a little bit like mortgages. The whole purpose of the mortgage market was to allow the average American to buy much more house than he can afford. So that's happened on an epic scale. But when that market slows down, you come down to a smaller ticket item like cars, and we've got the most, everybody out there is driving a Lexus, It's really because the banking system, the lenders, they figure out a way to stretch the term to 7 years. And just as so many homes are bought these days with the idea, hey, I'm never really going to own this, I'll just make the mortgage payments, it's almost getting to be the same thing with a car. I'll never really own this $65,000 Lexus, but I'll just make payments on it for a while and hope that I can get a decent price when I sell it and turn it over or whatever. So as much as consumers want to be smart, the banking system is sort of preying on the low, stupid end that wants to get into more Lexus than they can afford.
Tesla had a surprising profit this last quarter. Do you think Tesla is going to be able to tough it out?
I love Tesla. You know, I've got one guy in my chat room who's always, it's almost like he's got binoculars on every Tesla lot. Well, we've got X number of unsold cars and this and that. But I really admire Musk because unlike all these paper shufflers, these guys like certainly Uber and WeWork, Musk went out there and he built a beautiful product that's really fast, and you know the next Tesla is going to do 0 to 60 in under 2 seconds. So how many guys? You know, there's only one other guy I can think of that bets it all. That's Steve Wynn. But I really admire Tesla. And you know, so it's, but that said, I think the people who manipulate Tesla stock for a living, they're really among the most adept sleazeball operators in the whole game. I mean, for going back to the initial Tesla shakedown, the stories were always it was some picture of a Tesla on the side of the road in flames because of battery problems. So they do this all the time. I've never seen a stock have the news so hugely manipulated as it is in Tesla. It's amazing. So I don't have any sympathy for shareholders. The stock's all over the place, and they certainly got it wrong there. And I think that they get it wrong because Musk plays his cards very close to his chest. So, or his vest, I guess as the saying goes. So, Tesla looks, as long as they keep producing cars, I'm not going to say anything bad about the company.
Bitcoin and cryptocurrencies, your thoughts?
I just had a buy signal out there the other day at 7,600. I see it's up $1,000 already. I didn't intend it to be. I really thought my buy is what's called mechanical. I'm looking at the weekly chart of a vehicle that is on the symbol BRTI. BRTI is a Chicago Merck product that tracks a whole bunch of Bitcoin products, real-time bids and offers. So it's really good live proxy for Bitcoin prices. Currently $8,618 per Bitcoin. And again, my buy just this week was 7,600. It's up to 8,600. But I really think there's risk. We may not have seen a bottom. It could come down to 61.66. You can jot that down. The buy at 7,600, 7609 was the exact number, was predicated on a pretty nasty stop loss. The stop loss would be down there around 3,134. So it's like a $4,600 stop loss. That's a lot of risk. But I just wanted to put the target out there because on a purely mechanical basis, Bitcoin has tripped this buy signal, and it's good for a run up to as high as 21,000. So with Bitcoin currently trading $8,600, there's quite a bit of room for upside appreciation.
What markets are you keeping a close eye on right now at Rick's Picks?
Well, I mentioned earlier that I don't like to get fooled, and I like to zero in on things that I'm absolutely sure of. And for the last few months, I've been pretty sure of the fact that Apple was going to go higher. And I don't think you have to complicate it, really. You could be looking at copper, or this or that, or utilities, but to get some idea of the markets, or heaven forbid, you could look at price earnings multiples or something ridiculous like that. But I just like to look at it, I guess you could say, intuitively. And my instincts are that Apple, as long as it's going up, the bull market's going to keep going up. So when I look at a chart of Apple, the 243 and change target was there's no way it couldn't have gotten there. So it made me bullish. So let's just say that to keep tabs on the market and to be absolutely correct about where it's going and to never let my innate bearishness get the better of me. You asked me what I'm following Apple. And Amazon too. I think that, when they slam dunked Amazon yesterday, reported reported kind of punk earnings, but you have to look at the reason. The reason was that they plowed a lot back into getting packages to us in a single day. That's a very expensive thing for Amazon to do. But you'll remember that the sleazeballs who work Amazon up and down and shake it down when they want to buy it. This was their only story a few years ago. The whole Amazon story pivoted on, is this company ever going to bring some money down to the bottom line? Are they going to keep plowing it back into the company? So that was a stupid story to try to sort of sell as a bearish one, and they're doing it again. Here Amazon is absolutely murdering the competition. It's consolidating its hold on a transport sector here, getting these packages out, and investors, the shakedown artists, are pretending that this is a reason to sell the stock, that Amazon is consolidating its grip on deliveries. So when I see a stock like that, Amazon, get really whacked for such a stupid reason, it's really bullish. So like Apple, as long as Amazon is headed higher, and it will head higher now because they shook it out as badly as they wanted to, as badly as they needed to today. So I like Apple and I like Amazon, and I don't like them really. I mean, if you ask me about Apple in the real world, the company is clueless. It's about to plunge into streaming, which it knows, streaming content just at a time when Netflix is thinking, geez, are we spending too much money here? So Apple is clueless about what it's going to do next, and the only thing you can think of is phones that are incredibly that have very sophisticated cameras, and if that's what they got to keep doing to sell $1,100 cell phones to people, then they sell a lot of them. So you really can't sell Apple short, but you can say that it ain't the old company that it was. And they're clueless. They don't really, they just don't, they're not a leader at all in anything. And, so you can hate the company and hate the stock, and you can say people are keeping their phones longer, and that's going to impact on revenues because Apple is so, phone sale dependent. So I hate the stock that way. I don't hate Amazon. It's hard to, the only cloud I can see over Amazon is that when we go into a recession, there are going to be riots in the street. They're going to come out with pitchforks looking for Jeff Bezos, with the idea that Amazon so completely dominates retail that they are a monopolist. So I think that day will come for Amazon, but right now it's hard to think of reasons to not like the stock.
Where can people find out more about Rick's picks?
rickackerman.com. If you go to that address, there's a free trial there. You can take a free 2-week trial. Come into the chat room when you've signed up. I think we've got the best trading room in the world there. There are people just banging out trades all day in E-minis, and they're a very generous bunch. They share trading ideas in real time, and it's a great place to learn how to trade profitably. So again, that's rickackerman.com. Just click on the free trial, and no credit card necessary. You'll be right there.
Rick, thank you so much for being on This Week in Money.
Thank you, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. He was speaking to us from South Florida. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Steve Saretsky, Rick Ackerman, and thank you for listening. If you have any questions for our show or our guests, you can send them to info@housestreet.com. Now stand by for company showcase updates from American Manganese CEO Larry Reaugh and Aven Resources President Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, thanks, Jim.
Larry, a news release was cranked out by American Manganese this morning. What was in it?
Well, we were just talking about our results to date on the Pier 1 testing that we're doing, at least on one of the companies. And it's interesting that it seemed to have a positive effect on the market. We've traded 650,000 shares between the U.S. and Canada. So that's what we like to see. Now, I've had a few questions about the press release. We explained in the press release what we did, and but there are some nuances that people want me to address, and so I'm going to try to run through those right away. One, I think the sample weight was 4 kilograms or something, or 5 kilograms, and that was done on a bench scale before we run it through the pilot plant. But we did find some impurities in there that we weren't sure if some of those elements were not used in the formulation of the Pier 1 company. So we had to stop everything. Now that we only went through this once. We just ran it through, got these results back, and another question that came up was, who all are we using for the lab testing? We use an outside assay service to give us the assays, and but Chemetco does everything, and so it's under their, I guess it should say, their prevalence that the results come out. Now, the recovery rate results were on a first pass basis. There's obviously, I just mentioned, there were impurities in there, and Chemetco said it was in their words, high quality nickel cobalt hydroxide, but that doesn't mean it's a battery ready hydroxide. Remember, this is just the first test. So, but for the results we got high numbers. And now we'll move ahead to improve those numbers, which we kind of explained in the press release. And there was I'm just trying to think of all the questions that were asked, that I was hoping that I would be able to address. And one of the questions was the large strips that they sent the material in. Yes, that is a bit of a problem because larger strips tend to fold over, and you can't get all of the cathode material out. We have, when we prepare the strips, we have a certain size we go to, and we get the majority of the cathode material off of the aluminum strips. So that's a lesson learned. We're going to have to do some extra treatment on the strips in the future to reduce the size, because it would be nice to work with larger sizes, but the unfortunate thing is that aluminum is so thin that it can crumple over. When it crumples over, it's not exposing the cathode materials to the actual process, so you're not getting it all back. So that will change. We do all the testing with Chemetco, and I think that's about all I can remember on what the questions were. So the percentage amounts were, were excellent as far as we're concerned. As far as Kemetco's concerned, those are those words, their words, not mine. And so we proceed on. So the one thing that I'd like to remind our shareholders of is the fact that we do a lot of reporting on our results, which you're not seeing in any of our competitors out there. And I bring that up because I'm always asked to compare, our results to other competitors out there, and I won't name them, but they're not coming forth with what they're getting back on the cathode material, except for broad numbers on recycling, and so we can't really compare our process to anybody else's unless they've filed a patent. We can go look at it. We can see that they're actually using other methodologies, and this is a personal and Kemetco observation, which we feel are inferior to ours, but. We're moving along, and unfortunately, we're testing a different material than we've tested in the past, being prepared by companies that do their own preparation on it, which may not jive with our preparation. So we're learning lessons, and this lesson that we learned is that we should be able to report some battery grade material here in the next short while. Now, the reality is that we are trying to get the best results we can for Tier 1 companies. We want to turn this around to them in a form that will be conducive to perhaps some kind of a agreement in the future. So. I can't say that I'm not unhappy with the results in the market today. The results show that the company is striving forward, and that we are looking after the dotting the I's and crossing the T's. So all I can really say is, hey, I'm happy with the results, and Kemetco's happy with the results. We've got the questions answered, and we can proceed now to actually work strictly on recoveries and purities. So that's the next step. In the general market, we were reported in the waste management newsletter. So that'll be attached to this press release. We do get a lot of third-party reporting from different sources around the world, and that is, obviously we have believers in the right industry that are following our story. So there's nothing more that I can tell you that should reinforce the value of what we're doing. We're not paying for that, and it's just being carried on by people that are reporting because they like what we're doing, and the reputable companies are doing the reporting. So it's I had a whole bunch of questions asked, and that usually throws me off my sauce when I'm doing the podcast, because I have some formulations in my mind and what I'm going to talk about, but when I have to refer back to other people's questions, that makes me stutter a bit. But we see that in our own Prime Minister, so I got good company that way.
Larry, for people new to American Manganese, what are you all about?
Well, we're a critical metals company that developed a process back in 2009 to 2011 for treating low-grade manganese, and that process is patented in 4 countries, and Kemetco recognized that the chemistries were pretty much the same for the cathode materials and lithium-ion batteries, so we began work in 2016, and since then we've had 2 patents, and we got a 3rd one coming, and that one is that's really a big advancement. I can't think of any other company out there that has at least has divulged what they're doing in a manner that you could follow and see that, hey, these are their recoveries and these are what they're doing. It's always, like I say, broad statements. So we're moving ahead with the recycling of lithium-ion batteries, and we're traded on the Venture Exchange, the Toronto Stock Exchange Venture, under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. So we have a website out there where you can do all your due diligence. A lot of the questions I get asked are answered in the due diligence, but we don't mind helping you through that. And you can phone us at 778-574-4444, or you can send me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
My guest is Jim Pettit, CEO and President of Aven Resources. Welcome back to the show, Jim.
Thank you very much, Jim.
Aben Resources, have you wrapped up your drilling for the year yet?
No, not yet. We've got seven more holes to report on as we head south in our drill program. We're almost there. We have finished drilling. We stopped basically, we demobbed about a week ago. We stopped at 9,600 meters, so we almost made it to 10. And it's very much, this is an exploration program. This is what we set out to do in year one, and now we're in year three, and we're finally getting around to do it. Our first series of holes in the whole program hit the north boundary zone, which was very high grade, have intersections of 30-plus grams over 10 meters, that sort of thing. We pretty much drilled that solidly last year, so we know it's in an area. We know it's a zone about 100 meters. The guts of it are about 100 meters north-south and 50 meters east-west, with a lineament that heads south, head down to the Noranda hole, where we started this year. And what we're doing now is it's all exploratory drilling. We're trying to duplicate what we found up there, and we're trying to find the type of structures that we can now see on the north boundary zone. So we've done a very large-scale regional exploration program that took us well down south in the boundary zone in general, heading south of the south boundary. What we've got now to date is about a 700-meter corridor that's fairly significantly mineralized. Everything we've hit within that corridor as we head south from the north boundary zone, all the holes are mineralized, anywhere from trace to 1 gram, and then you've got elevated levels of up to 5 grams within most of the holes, and it's significant because these intercepts are pretty broad. What we've also done this year is we drilled longer holes and deeper holes to give us a better understanding of what we're looking at, and the reason for that was the geophysics we did back in May. It gave us a number of things to look at. So looking at the geophysics in these big intrusives that we think are there, something's there. It's very obvious. And then also following the alteration. And we're pretty aware that we're looking at three different mineralizing events, because we did hit in one of the holes mudstones into the what I call the Eskay formation. down at the bottom of one of the holes. It's pretty significant that we hit that, because that was kind of the holy grail back 30 years ago when all these companies came through, like Noranda came through, and were drilling 1 kilometer spacings looking for the specific Eskay horizon, which is, basically it's a VMS. It's a VMS system. What the resurgence was all about in more recent times, like what we're doing, was looking for something other than that, right? Because there is more. Brucejack is a good example of that, hydrothermal environment. Porphyry environments are all over there, as is, Red Chris. You got large porphyries. So we're in an area that is looking like it's got epithermal environment. We've got porphyries. We are pretty confident that there could be porphyries down below, underneath, if we go deeper, which is good to have the epithermal event on top. And now we've got evidence of VMS. So we're in an area that's pretty active. The zone we're in is 6 kilometers. The boundary zone 6 kilometers north-south. And, that's the extent of the geochem survey that we've got. We've also got another 12 to 15 kilometers south of that we've just touched on. We put 2 holes in down south, 12 kilometers south, just to test this intrusion that's sticking out. And it's never been drilled, so we thought we'd get in there. And by drilling that, it gave us the necessary amount of money spent in that particular claim block that now we have earned 100% interest in everything. The whole property now is 100% ours.
Where is all this action taking place, and what exactly are you looking for?
Well, we're a gold exploration company with an emphasis on exploration, and it's in the Golden Triangle, northwestern British Columbia. Great jurisdiction, great place to work as compared to the old days when they were up there. Lots of old past producers, some new producers up there. There's lots of activity. I think over the last couple of years, it's $250 million spent on exploration in BC up there, which is about 40% of all expenditures in BC. So it's a very active, very good region.
Where are you traded, and under what symbols?
Well, we're traded on the TSX Venture under the symbol ABN, on OTC in the States, OTCQB ABN.F. And the Bourse Frankfurt is E2L2.
And how can people get more information about Aven Resources?
Well, we got a great website, www.abenresources.com. Very informative, lots of information there for everybody. Encourage you to go, and on there you'll see you can contact the company, or Don Myers in particular, or me. Phone numbers are there.
Jim, thank you so much for the update.
Thank you very much.
I've been speaking with Jim Pettit, CEO and President of Aven Resources. I'm Jim Goddard. Our conversation took place on October 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.